Well, good morning and welcome to Business Morning. I'm Ladi Williams. Well, today, Nigeria stands at a critical economic crossroads, from refinery reforms and expected Chinese partnerships to the rapid rise of digital identity and fintech payments and the urgent conversation around building sustainable wealth. Today's program connects the policies, the technology, and the opportunities driving growth. First off, let's get a check on some of the markets. Now, we're seeing oil prices. They opened lower today, kicking off this trading week, down 1.07%. That's for Brent crude, $67.30 a barrel. Then we see WTI crude, that's still holding up comfortably, above $60 per barrel, but it's down 1.09% to start. And it's the same old issue at this point. The United States, Iran, they've agreed to continue talks over Tehran's nuclear program. The renewed diplomacy has reassured investors who had worried that, escalating tensions could threaten, crude supplies from the region and send prices sharply higher. That's changed right now. But analysts say with negotiations going, back to the table, the immediate risk premium in all markets is beginning to fade, at least for now. So, so we're seeing oil down at this point. We'll see if that continues throughout this week. All right, to our first conversation now. Nigeria's struggling refining sector may be on the brink of another reset. So Nigeria National Petroleum Company Limited is reportedly in advanced talks with Chinese firms to rehabilitate and possibly co-manage some of the country's dormant state-owned refineries, a move aimed at restoring, local processing capacity, cutting billions of dollars spent annually on fuel imports, even though we have the Dangote refinery at this point, and strengthening energy security. Join me now to unpack this. We have Chinnan Dikwai, as the Vice Chair, Africa Energy Council, joining me via Zoom. Great to have you on the show. Good morning.
Hi, Ladi. Good to see you.
Yeah, it's great to have you. So, NNPCL, they're reportedly in talks with Chinese firms to rehabilitate local refineries. What should Nigeria be looking for in a foreign technical partner?
That's a great question, Ladi. So I completely understand how jaded, how tired Nigerians feel around, when you mention the word refineries. There's no question that everybody's tired about hearing this. We paid about $3.2 billion the last couple of years to revamp all of this, all down the drain, and people are getting jaded naturally. But I'll say this, yes, the focus is on the Chinese partner, but before I answer your question, I'll just go back to what the GCO of NNPC said, just to break down his statement, and then I'll pick up this answer. So if you listen to what he said, which I think was really poignant, Bio said that for a refinery to work, these are his thoughts, there are three key things that have to come together. It's almost like a triangle. Top one of the triangle, he said, was financing. Next one, he said, was the EPC contract. EPC, just for people to know, engineering, procurement, and construction. And then the third one, he said, was the O&M, operation and maintenance of that refinery. So to summarize, you want to build a refinery, you have to go to the bank to try to get the money, financing. Once you have the money, you have to design the refinery and all of that, and procure it, and then build it, EPC. Once you build it, now it needs to go into operation, O&M, operation and maintenance. Bio said that in Nigeria, we've tended to focus on the top two, financing and EPC. And the reason for that is not far off. And when I listened to him, I heard what Bio was saying. I also heard what he was not saying. So these are my thoughts. What Bio was saying in terms of financing, when you look at financing, he made it very clear. The financing, do we get it? Yes, we do. But he was saying that much of the way the financing and the EPC was done was to take value away from the system. He was saying that they take value away and then they leave the operation and maintenance almost with no thought in them. The biggest problem he was saying was the two. Now, financing, how does that work? To organize finance, and Ladi, pardon me, I just want to break this down, so I'm going to take a lot of time. Organized financing, somebody would have to go to the bank. There's an arrangement fee, that the person will be paid. There's an advisory fee, there are commitment fees, there's foreign exchange hedging and all of that. A lot of focus used to go in there. And of course, there are incentives for whoever is doing this, okay? This is the reality. So huge focus there, understandably. When you go into engineering, procurement, construction, EPC, the same. And EPC is a contractor, most of the time a foreign contractor. The way the deal was structured in the past was very opaque. They would allow scope creep. So first of all, they would say the scope is X, but then they write the contract in such a way that they allow the contract to say, the scope is not, it's not going to work, so they would extend it. In all of those extensions and variation orders, money is fretted away. Even the bill of quantity for every material on there is inflated. When you look at it, even the work that's done is poor quality, so a lot of work goes into the rework and all of that. Bio was saying, okay, in very diplomatic terms. If you're a technical person, you can hear it. All right. He was saying in diplomatic terms what the problem was, but I could hear what he was not saying as well. And it's very clear that we focus on these two because there is a lot of pie for whoever's doing it. They can take all of that value away. Not a lot of value was given to, you know what, with all of this thing done, now we have a refinery. How do we operate that refinery? Nobody thought about that. So by the time it's delivered to you, you don't even have the right manpower to do it. And even when it came to O&M, they would even make it a contract. So I'm quoting him. He said it was done in such a way that there is no skin in the game. Nobody here has skin in the game. The guy who's financing comes and finances it, takes his money away. He finances, takes the value, whatever value he takes away, he goes. The EPC guy comes and delivers to you a project. He doesn't have skin in the game. He's built it for you, designed all of that. He goes away. He doesn't have skin in the game. Even the operation and maintenance cost is done in such a way that it's very shoddy. They don't have skin in the game. Bayo is saying with the Chinese, he's looking for an equity partner. So this is not somebody who will just come and deliver a service. This is somebody with understanding of how refineries are run, and they would have to come and take equity in here, and they will run the refinery with Nigerians. There will be knowledge transfer to Nigerians. After a while, we should be able to take it and run with. And I think the lady there asked a very important question. How much equity would you give? Of course, you would not tell her right now what the numbers are because it has to be looked at very cleverly. But without a doubt, it's a powerful place to be. And I think, if we can get any of PetroChina, you can get any of Sinochem or Sinopec. These are established players in China who have run petrochemical plants, and they will bring value.
All right, talking about value at this point and bringing value, let's look at what's been spent so far. 13 trillion naira between 2023 and 2024, and that's spending on the Port Harcourt, Warri, and Kaduna refineries. Total cost there, 13.2 trillion. 2023 debt, 4.5 trillion. 2024 debt, 8.67 trillion. Turnaround maintenance costs, refinery operational support, bank charges and financing costs, and continued commercial losses at this point. And, looking at this, it almost seems what's going to change, really, this time? Is it going to be the same old spending with no result or no oil, coming out from those refineries? What must be done differently this time to ensure success?
You paint a really good picture there, and it's very humbling. When you do it in Naira like that, trillions and trillions, it really shocks. But even in dollars, it shocks as well. For the three that you described there, in dollars, it's about 3.2 billion. This is a lot of money. Now, I'll put that in context. 3.2 billion, our budget for 2026 is about $40 billion. Okay, so almost 10% of our budget. Just so you know, just for refineries, almost 10% of our budget. So it's a lot of money. To answer your question, what needs to change? I think Bio has diagnosed the problem in the right way. We do not need contractors anymore. We do not need contractors who don't have skin in the game. A guy who comes and offers you a service and you finish and says bye-bye. He doesn't have any incentive to make sure that that refinery is built operationally. They can run for the next 40, 50 years. What we need are people who would come and take equity in there. Their money is also at risk as much as Nigerian money is at risk. And I think to your point, what can we do differently? I think is a right approach. We find a partner and not a contractor, a partner who takes equity. He comes with not just money, but technical expertise of running refineries around well. And when he does that, we hold him to account. We make sure that our people are being trained side by side so that we can also learn operationally how these refineries work. I think that is what we need. I'll quote him again. The previous system was designed to take value away. Pay me my advisory fee. I brought this financing. Pay me my money. I brought this EPC contract. Today, the way this is set up, it is entirely different. It will be, if this goes through, it would be with somebody who has run refineries before. They understand what risks are. They understand what margins are. Now, Ladi, bear in mind, running a refinery is not like upstream oil and gas. In upstream oil and gas, margins are high. Refineries, the margin are very low. It's high volume. Volume of what you produce is big, but margin is tiny. Any mistake, you're off into loss. So you need a technical partner who knows what they're doing. And I know for a fact that some of these ones in China potentially could bring that value. I can't vouch for anyone, but we've seen it happen over and over again. And I think there's a right approach to go for.
All right, definitely we'll keep tracking all of that. But it's a brand new week, and we're already seeing oil kicking off on the back foot. Now, let's look at the global side of things. What are you expecting for oil prices this week?
I think you mentioned that already. Some of the risk premium has been taken off because we see that the US is engaging and having a discussion with Iran right now. But I'd say, many people know this already, that, the US government would say one thing and then they execute, something completely different. And I'm saying that because I sit in, usually sit in the Middle East, and we know, the amount of tension that does happen around here. I think for this week, we don't expect massive movement. What I would say is looking sort of 3-4 months down the line, we do expect to see, again, huge oversupply because there are several factors that we're seeing coming into the market, a bit of oversupply. And I think oil in sort of ranges where they are, $61 per barrel, $60 per barrel is probably a fair price for now. I think as we go into the summer months, for sure, would get that oversupply. But maybe as we go into Q4, we expect to see that demand could pick up, especially from China right now.
All right, so much to unpack there. Thank you so much, Chinnan, for helping us make sense of what to expect for Nigerian refineries at this point. Chinnan Dikwai is the Vice Chair, Africa Energy Council. Thank you so much for coming on today.
Pleasure. Thank you.
All right, let's take stock of what played out in Nigeria's stock market last week. It's an extended rally last week as investor confidence strengthened on the back of solid corporate earnings and renewed buying across key sectors. All-share index that climbed about 3.84% week on week to 171,000 points. The equity cap 110 trillion. Just a few days or weeks ago, we're celebrating 106 trillion, but now we've crossed 110 at this point. Now we see heavyweight stocks led the charge. The likes of MTN Nigeria, Dangote Cement, Seplat, WAPCO, and Stanbic all posted strong advances, lifting market momentum and trading activity also surged. We see for the counters that we tracked there, the loan lag there was 2.3% drop for insurance, but everything else was in agreement with the oil and gas counter getting a big break with the likes of Seplat and Ardell, having that monster run last week, taking the counter up 10.88%. So that was the picture right there. If you look at the top gainers for the week last week, we see RT Briscoe topped with a 60.69% advance last week. Zinc is that's the new kid on the block. That also rose 60.38%. Abbey Mortgage Bank 59.04%. That's for the whole trading week last week. Let's look at the laggards for last week. Now we see Deep Capital, profit taking on that one. Most of January, this was always in the green. But we're seeing profit taking there, 27.37% down to closing. UH Real Estate Investment Trust, 26.99% drop. And Red Star Express, not seen that in a while on the gainers or losers chart, but it did drop 17.55% last week. So that was the color. We'll see how it plays out this week. Analysts are expecting some kind of cautious trading this week. We'll see if that really plays out. Then, on the data front, we should get inflation data sometime this week or maybe early next week. All right, so other stories now. New data from the World Bank shows the country is now, Nigeria is now the second largest manufacturing producer on the continent by value, trailing only Egypt. Egypt recorded about $59.6 billion in manufacturing output in 2023, while Nigeria followed closely with $55.7 billion ahead of South Africa. The ranking highlights Nigeria's expanding footprint across cement, food and beverages, consumer goods, and refining sectors that are increasingly shaping the country's industrial strength. But analysts say while the numbers signal growth, persistent challenges around infrastructure, energy, and policy still weigh on competitiveness. As Africa's manufacturing race intensifies, Nigeria's position could play a key role in attracting fresh investment and boosting local production. Then we see the CAC, they're saying that they've delisted more than 400,000 inactive and non-compliant companies in 2025, removing dormant entities to protect the integrity of the national database. Registrar General Hussein Magaji says the move is part of broader reforms to modernize operations with services now available online 24 hours a day, allowing businesses to register from anywhere. At the same time, the Commission is boosting entrepreneurship, partnering with Smedan to support 250,000 small business owners with free registrations. Definitely, that's a nice boost, for some of these companies looking to come in. All right, to other matters now. Grocery prices in Nigeria have recorded over 580% rise between 2020 and early 2026, driven by currency depreciation and supply chain challenges, while the federal government says the expenditure of over $10 billion annually on food imports, specifically targeting staples like wheat, rice, sugar, fish, and tomato paste in 2025. Yes, the solution lies in local manufacturing and the ease of doing business. Take a listen.
Industrial hub of the state, not because of anything, but because of the influx of businesses. And it is because the government is doing what is right to bring them in. Good roads. And another major thing we are fighting is that ease of doing business. TAS is harmonized in order to see that what you pay is not, you are not paying double taxation, you are not being harassed to pay taxes that you are not supposed to pay.
We should try to encourage the government on ease of doing business, because although they have to do more, but they should have the political will to hire and to fire. Because when you look at our ports, it still takes almost about 1 month to even clear from our ports to our warehouse. So that is still a big question mark. And when it comes to the finance industry, they should be open, because the money is not still there.
All right, to our next conversation now. Nigeria's digital economy is growing at lightning speed, transforming the way people and businesses connect, pay, and verify their identities. Now we're taking a closer look at the digital identity and payments landscape, a sector that's driving financial inclusion and redefining how Nigerians interact with money. From mobile wallets and QR codes to fintech APIs and cross-border solutions, the industry is evolving fast. We explore the trends shaping this growth, the opportunities and challenges in building trust and security, and the innovation set to define the next wave of digital finance across Africa. Joining me for this conversation, I have Dr. Olufemi Oyenuga as the Group Executive Director at Chams Holdco. Joining me right here in the studio. It's great to have you, sir. Good morning.
Great to have you, Laddie.
Happy New Year. Yeah.
And as we look forward to Valentine.
Yeah.
It's Saturday, I think.
Pressure.
Pressure, isn't it?
Valentine.
But we're here.
Another one.
Saturday. We are all.
Okay. Let's see if we can all impress.
Yes.
This
That's
time.
what we can do.
Okay. So let's look at Nigeria's digital economy. Is rapidly growing at this point. How would you describe the state of things right now? Looking at 2025 and coming into this new year in 2026, what have you seen?
Thank you very much, Laddie. That's a great question. And if you look at the headwind and the tailwind of the growth, it's a good balance, a good mix. I mean, you look at the numbers, the global numbers that's driving Nigeria, GDP, 4.3, 4.2, 4.5 sort of percentage growth this year. And Nigeria is being poised to actually grow the global economy by 1.5%, really greater than South Africa anyway. So it's good news. So if we look at that entire identity space, it started with just pure vanilla identity 1.0. where payment was not included, and Chams came up with BVN and NIM. We graduated from that and integrated mobile money, mobile wallet into it. And that's where we have the Chams mobile company and a lot of mobile companies and 17 different Momo operators in Nigeria. Now we're now pivoting to the AI space, which I will call the 3.0, where you're looking at energy space, chips, cloud, AI models, and lovely payment imperatives for QR code that drives financial inclusion. So really very good story, a very lovely balance when you look at it all happening in Nigeria. And we are at the center of it because we're a fintech organization. So that's what Chams has done. In fairness, Chams also created Chams Corporation PLC, which is part of a subsidiary of the Holdco, to drive that chasm of digital infrastructure into Africa as we begin to build out the infrastructure landscape. So fantastic news, I think.
Right, and definitely, seeing that we're still able to make payments.
Yes.
At this point, when you try to send money, at least it still, moves. But looking at it from the continent,
yes,
at this point, what countries would you say are leading, in Africa when it comes to, the payments infrastructure?
It depends, like Iladi. And the reason where it depends is that Nigeria started this movement. It's amazing if you look at the maturity of the payment ecosystem in Nigeria. We took a backside a bit when we did not really fully integrate the blockchain crypto payment into our ecosystem. But we recalibrated, and then we're issuing digital licenses that looks at that as well. So I think Nigeria is still there, but Kenya is actually, moving the fulcrum dialing ahead. Rwanda is coming in, but I think we're still there. I mean, it's not because I'm a Nigerian, but Nigeria, Kenya,
East Africa, they seem to have some kind of edge.
Yes, they do. And what they've done is that they have this SADC constitution, SADC framework that has taken identity a bit notch and what we've done in West Africa. So if you carry an East African passport, it's like the ECOWAS passport, but it's more integrated in terms of the identity. So that has helped them move this further than we've done. But we are coming behind anyway. I mean, Nigeria is 230 million. We can consume the entire market of East Africa. The economy of Lagos is greater than that of Kenya. So when we say East Africa, that's why it depends.
Right.
But we're there.
And, definitely identity is a huge part of financial inclusion.
Absolutely.
And you did mention, I wonder how tough it is identifying over 230 million people.
It's not that tough. Technology has helped us to actually redefine the chasm. You bifurcate Nigeria into 6 zones. You really have the 6 geometrical distribution of Nigeria. You bifurcate it by population density. You have 60 million, to 80 million youthful Nigerian. You bifurcate it to educational sector, sectoral-wise. It's actually easy. But what we've done, like in Chams, is that in the last 20 years, we've been growing this vanguard of identity. So we started from hardware, networking, and then we move into identity, BVN, NIM, SIM-Reg, and all that, driver's license. And that is what we've done in our ecosystem. So it makes it easier as we begin to travel the journey ahead.
Right. Okay, so the payment ecosystem, we know that's evolving, a lot at this point, rapidly with QR codes.
Solid, yeah.
And you did mention AI. What are the trends are you seeing, coming in 2026?
Open banking. We've actually had that open banking policy for the past 5 years, but we're now taking it with intentionality to take it further up, open banking. The other thing that we've done as well is the sandbox from CBN, where you can see a lot of proliferation of API integration, AFTCA, as we're after through the papers, cross-border trading and things like that. So all that is actually moving us ahead of the chain in 2026 and beyond. And AI plays a pivotal role in that. So what AI is doing is building that model, the serves of that layer for the democratization of payments and identity. So a very beautiful union.
Right, and we also have that union, security.
Absolutely. It's securitized, cybersecurity. The hackers are running. We are chasing them. we're also...
Because the hackers, they keep evolving.
They have to evolve.
Right.
It's an evolving, revolving door. They have to evolve. At some point, some people traveled in water, some people travel, over the land. Now people are going to space. It's evolution. So how do we make sure that our developers are agile enough to be at the head of the chain, of the food chain? That's what we're doing. So cybersecurity will continue to evolve, and the penetration of that as well as help Nigeria move forward.
All right, and definitely, I can't let you leave without talking about earnings.
Oh yes, earnings. So
it's earnings season, at this point, and looking at the latest one, you're a listed company.
Yes, we are.
In Nigeria, and I will see revenue. That's 17 billion.
Yes.
17.49 billion.
An 18%
up about 17.9%. Okay, 18% if you approximate that. Gross profit, 3.7 billion. Yes. 3.78 billion, but that's down about 13.1%. Operating profit, that rose 17.3%.
Yes,
1.37 billion.
And profit before earnings per shares as well.
Earnings per share, that rose about 19.5%. Profit after tax up 54.9%. Then, looking at these earnings, for the bullish point here, strong growth in revenue and profit, huge jump in card business.
Yes.
Long-term growth trend, that's been signaled there. Major clients and diversification. But for the bearish points, gross profit margin, that was squeezed. Cost of sale rose sharply, about 30.8%.
Absolutely.
Profit margin was boosted by core operations this time. Big profit increase was partly due to cutting admin and tax costs, not just selling more products. That's one of the bearish parts.
It is bearish.
Physical products still heavy part of the business. Talk to me about this.
Thank you very much. We're very intentional about growing to Africa and doing more with less and seeing how we dimension our business. So what we try to do is to say, okay, this year, the Chams shares actually crossed over to 5 naira. At some point, it was trading at 5 naira 33 kobo, 5 naira 40 kobo. All that is culminated in our profit that you see at 54%. But really, the juice of the market is earnings per shares. How we really return value to our stakeholders. Our shareholders have been with us. We thank them, we congratulate them, we celebrate them. And we're trying to pay dividends to them as well, so that their money works for them even when they're sleeping. So what have we done? We took a cost review of our business and then refocused into digital services, cybersecurity through Chams Access, Union Pay integration through Chams Switch, and then created Chams Cooperation that talks to the national digital device strategy for the nation. We're going into bullishly creating empowerment for technology through CBT centers, University Scholar Program, through Chams Core, and building data center through Chams Digital Data Center Services in collaboration with other organizations. Sovereignty is key to us, and that sovereignty is about impact, delivering value, and uplifting mankind through technology, identity, payment, and also just being green in Chams. So my blood is always green, and my blood is always blue. Chams Core is blue, Chams Holdco is green, and then we're there to serve our shareholders and Nigeria. That's what we've been doing. So hang on a minute, Ladi. The table is shaking, and we are looking at a 3x growth in our revenue top line for this year. It might be 4x.
Because these are unaudited earnings.
Yes.
At this point, we'll definitely get the audited version.
The real juice. Far from it now, but we want to keep it at 5. I think if we are really looking at what we're trying to drive, we're trying to position Chams to 20 naira per shares. That's where we're going, from 5 to 20 naira. It's doable. Impossibility is a myth, but technology takes us there.
Technology takes us there.
But thank you very much.
So much to unpack there.
Yes.
Thank you so much for helping us, get a clear sense of, what to expect for the industry and, some of these latest earnings. We like to unpack these earnings. It gives us some, clarity about
when I came here the last
time,
we were doing our right issue. And thanks to our shareholders, we actually had a 35 to 37% oversubscription in the right issue. We're going to knock the market again gracefully, not rudely, proudly, to say we can return more value by doing an IPO in Q3 or Q4 this year, looking at a $50 to $60 million raise in the market. Because we've shown intentionality and result, this result shows a forward trajectory for Chams Holdco.
Right.
And we want to delight our shareholders.
Okay, but I hope there's no risk of, financial pressure, at this point, seeing that we're knocking at the door.
No, we take each day as it comes. There's no risk of financial pressure, but we're also trying to do something creative. If you look at the artisan landscape as well, how do you empower the artisans? So we're trying to come up with products such as smart artisans, blue works, how we really add value to the 25 to 30 million artisans, the bricklayers, the organizers, the informal sector that actually grows the SME. Those are the things we are solving for. We're not confused. So the blueprint is just slowly cooking. The slow cook pepper soup. Yeah, and that calls very well.
Fantastic. Thank you so much, Dr. Olufemi Oyenuga. Holdco, thank you so much for coming on today.
Thank you very much, Larry. It's always good to see you.
Fantastic. All right, we'll take a break now. When we come back, more conversations about fintech, but this time, investments. That's the moment. Just stay with us. All right, now to our next conversation. Fintech is no longer just about payments and transfers. Today, technology is opening the doors to investing, allowing everyday Nigerians to buy assets, grow savings and build wealth straight from their phones. But beyond the hype, how sustainable and secure are these digital investment platforms, and what strategies actually work for retail investors, that just have maybe 5K or 10K to invest? Joining us to unpack this now, we have Babatunde Obadero as the CEO of Zitra Investment with over 2 decades of experience in asset management, risk, and strategy. Good to have you on the show. Good morning.
Good to be here. Lovely.
Yeah, so technology, we keep talking about technology, fintech, and all of that. And we've seen a change, this time with the way people invest. Before now, you'd have to, call a stockbroker and say, okay, help me make this, I want to buy this stock, buy that.
Yeah.
But now you can just do it on your phone.
Absolutely.
Absolutely. You could just go on there, different apps, these days. And I'm wondering, was this expected, for you? In Nigeria, seeing how long you've been here, is traditional finance, are we finally seeing that handshake, with digital finance?
Nigeria is an interesting market, financial-wise. In reality, before fintechs showed up on the radar, we had started to make the adjustments in terms of moving to mobile. Of course, for starters, it was just your regular transfers and bills payments. But I think we're quite comfortable with mobile. Of course, back in the day, it would be relationship-based, it would be paper-heavy in terms of banking and financial transactions. But we've seen people move to mobile-led, maybe even arguably mobile-only for their financial transactions. And I don't think it is surprising. I think it's in line with the times, with the trend. In fact, that for most of us, we're comfortable doing nearly everything on our mobile devices. And so naturally, it makes sense that if I can do transfers on my phone and I can save on my phone, then I can also take my investment actions or activities on my mobile device as well. So I'll say it's just maybe natural.
Because when I remember the story, in the US, they had this Robinhood app.
Yeah.
And we see how the youth, use that app to actually sway the markets. Yeah, we've now had it, meme stock trading, over there in the US.
Yeah.
Are we getting the youths in Nigeria with some of this technology? Are they
more than most people realize we are? So let me say 2 things quickly. So you have in Nigeria today, you've seen how mobile penetration has mirrored financial inclusion, or financial inclusion has mirrored mobile penetration. So 55, 56% in terms of adoption of financial inclusion in just 5-6 years ago. You're seeing 64-65% right now. And so it's only natural that the young people that, what does our population look like? Probably more than 50% of Nigerians are 18 years or older.
Yeah,
so,
it's a youthful population.
So it's a very young country in terms of the demography. So very naturally, and you're not talking about, so for the young people, it's mobile first. In fact, it's mobile alone. I cannot remember or think of them trying to walk into the branch of a bank to do anything or an investment company. So it's only natural. And more than people think, they are adopting it. So people think about those changes, and the first thing you're thinking about is investment. For a lot of them, it's first savings. So we need to think first digital savings. And digital savings is like, you used an expression earlier, the door. I'll say digital savings is the doorway to investments. So
I saw some data recently. It says most Nigerians are not saving.
I think that data might be looking at traditional channels.
Right.
I think it might be looking at traditional channels. I think there are certain things that are changing in terms of where they save. And so how much of that is captured in the data you're describing? I think there is a lot more to it that we are not necessarily capturing.
Okay, because maybe the traditional banks are not giving that much when you save there.
So people are looking elsewhere.
Are giving better
in terms of yields and all
yields.
That. Now, but of course, it's important that people pay attention to things like regulation. Is this entity regulated? It's important that people pay attention to things like what license does this entity carry. It's important that people ensure that their monies are safe and secure and talk to their financial advisor.
Not that they promise you 50%.
Absolutely.
And they end up taking what you saved.
Yeah, you might lose all of what.
Yeah, we see the SEC always warning us about such platforms.
And then of course it's important that they talk to an advisor who can probably give them better context.
All right, so let's look at the macro snapshot of Nigeria right now. Monetary policy rate 27%. We did get that one cut in 2025 that took us there to 27%. Inflation rate 15.15%. Exchange rate 1,366. The Naira has been on a run this period. So looking at this and looking at the investing public in Nigeria right now, I did mention some people, they want to invest maybe 5,000 Naira, 10,000 Naira at this point. We know the HNIs, they do big money and they're able to make big money, back. But looking at 10K, 5K, is that really a game changer for someone trying to invest at this point?
My answer to that is a simple yes. I think that people must not lose sight of the compounding effect of money. So let me explain. Of savings, of investments in general. So let me use your example, 5,000 Naira. I'm a 23-year-old youth corper, Adamu, who just left uni a year ago and is serving and probably has just gotten a job. Say that I can save 5,000 Naira a week. Assume that I have plugged into the gig economy and I'm earning something else on the side, so I can save 5,000 Naira a week. 5,000 Naira a week is what? 20,000 Naira a month, 240,000 Naira a year. Assume that I put these funds that I have made in the year into a mutual fund at the end of the year. And let's see a scenario where maybe some way or the other, my earning grows 10-15% per annum. So say I add another 15% at the end of every year to what I am saving, which of course now goes into this mutual fund that I'm contributing to. In 25 years, Adamu's worth in terms of this fund is close to $500 million.
$500 million?
Yes.
This is Adamu we're talking about here.
And Adamu,
but that's 25 years.
And Adamu, of course.
All right.
Now, this is where my quick response to younger people, I'm a young person, younger people who talk to me sometimes about, who seem to be quite in a hurry to, I tell them things take time.
Right.
They just do.
Because the social media, they want to drive that car now.
Yep, but things take time. So he started out saving. Then it became the pathway to him learning about investment. And I think that three key things, and I believe that they are happening already. I'm seeing behavioral changes. I know some apps that literally savings and investments was how they became large global tech businesses, right? So, which is why I said earlier to you, I disagree with the perception that young people don't save. They do. And it's clear to me that they're changing behaviorally. It's clear to me that they're beginning to form the right habits. And if you do that consistently, it's inevitable that you're on your way to creating wealth. Now, wealth isn't about the destination alone. I think people should be comfortable with their journey there. And if you do that and you're not unnecessarily under undue pressure to make it quickly, and you understand that, look, it's this little so-called little drops, like Adamu, 5,000 naira,
you end up building
20,000 naira.
But in that journey, for Adamu, the different type of assets at this point. Does he stick to just the safe havens at this point, even though we're seeing the likes of gold, silver not acting, like safe havens right now? Or can he also play in risk? Can he get into risk in that journey?
My Adamu here didn't do anything crazy or anything ridiculously fancy. Adamu probably had his mutual funds yields of probably 20% or 19%, and he still gets there. So for a lot of people, I always advise that you start simple, you start easy. Your investment journey is a learning journey for you as well. You're learning how money works, you're learning, and so you don't start very aggressive, you start easy, you start with lower risk asset classes, and these opportunities are available. Like I said, talk to your broker, but also even on the apps that you're describing, that's exactly how they present, so you can take the easier, in quote, less riskier options that allow you over time to build your wealth. But hey, it's 5,000 naira, 20,000 naira, 240,000 naira, and then in 2.5 decades.
Right. Just build it. Just keep building at this point. And maybe sometimes take some advice from AI on building that wealth. At this point, thank you so much. It was great having this conversation with you, Mr. Babatunde Obadero, as the Chief Executive Officer, Zitra Investments. Thank you for coming on today.
Thank you so much. It was a pleasure being here.
Yeah. All right, we'll take a moment now. When we come back, we're going global. All right, let's go straight to the global space. Right now, it's a brand new week, and we're having John McQuarrie with the details on what's playing out with the global economy. Good to have you, Ini.
Thanks, Laddie. Good morning.
Good morning.
I heard you at the closing moments with your guests talking about getting advice from AI.
Yeah. Ini, it works. I tried it one time. Yeah. I put in the earnings of a company into AI, and I said, tell me about these. Is it bullish or bearish? Tell me the bullish parts, tell me the bearish parts, and if it will help the stock price rise. And it gave me some credible information.
So what happens to the good old follow the news, the rumors?
Oh yes, that's still there. You need to follow the fundamentals.
Even when you ask AI, you still have to take responsibility.
Oh yeah,
I hope you know.
Of course.
Okay.
Yeah. Don't let AI lose you money.
All right, good morning, everyone. We start off the global news with what to expect this week. And we can see it's going to be a very busy week around the world. Just I didn't see Nigeria there. We don't expect any data from Nigeria. But today, Monday, we're expecting from Singapore, their FX reserve should be out. In Indonesia, their consumer confidence data is what we're expecting. On Tuesday, that's tomorrow, from Japan, the M2 money stock year-on-year is expected. In Norway, core inflation month-on-month. Sweden will show their household consumption year-on-year. Brazil, consumption price index for month-on-month. On Wednesday, we head to South Africa. Business confidence data is expected. Non-farm payrolls from the United States, that's always sticking out and determines a whole lot of sentiment. Also from the United States, unemployment rate is expected. In China, CPI, inflation, with all that has been happening, CPI and PPI for the producers. In South Korea, the unemployment rate is expected on Wednesday. It's very busy in Asia. There are more expectations from Asia on Wednesday. Then on Thursday, we go to the United Kingdom. Production, manufacturing production, month on month is expected, and their trade balance as well. And then from the United States, there's the Federal Reserve balance sheet that should be shared on Thursday. And finally, for the week, we head back to Asia, where Japan foreign investment in Japanese stocks start to be shared, as well as in China, where house prices for year-on-year would be shared on that day. Away from expectations now, a little bit of what happened on Friday. We know on Friday the biggest news globally was the talks between the United States and Iran that was happening in Oman. Well, updates on that is that Iranian Foreign Minister Abbas has said that they've ruled out Tehran ever giving up uranium enrichment in its negotiations with Washington, insisting that it will not be intimidated by the threat of war by the United States. And he told a forum in Tehran that Tehran had little trust in Washington, sounds like trouble, and even doubted that the U.S. side was taking renewed negotiations seriously. And is asking, why should we insist on so much on enrichment and refuse to give it up, even if a war is imposed on them, that's Iran, because no one has the right to dictate their behavior. That's according to the minister there from Iran. So it sounds like a lot of trouble, and I'm sure by now, especially investors in the safe haven, that's the metals and oil, we will see a lot of reactions. I hope to bring you those numbers at intraday for during Business Incorporated. I'm sure this statement would have been factored in by then, and we're going to see movement in investors' sentiment. And then in China, low interest rate environment is driving a surge in interbank borrowing as financial institutions take advantage of cheap funding to buy bonds. The daily volume of overnight repurchase contracts rose to a record 8.2 trillion yuan, that's about $1.2 trillion, according to data from China Foreign Exchange Trade System. Financial institutions are increasingly using this tool to fund leveraged bond purchases. And now let's have a conversation on the future of emerging economies, rare earth minerals here on the continent, and of course the issue that, or the topic that the future population is in Africa. Nigeria captured. Having a conversation now with John Defterios. You would know him more from CNN. He's a former emerging market editor and anchor at CNN, but he's also senior fellow, Center for Energy and Materials at the World Economic Forum, and joins us here. Thank you so much, Mr. Defterios. Now, you recently moderated discussions with African heads of states on investments at the World Government Summit. What you heard, what's the strongest case that Africa can be making at this time?
From what you heard, Africa has what the world needs right now. So if you roll back to the COVID-19 pandemic and the Russia-Ukraine conflict, the kind of global narrative is you don't need to invest in new oil and gas projects or new mining projects. That has completely changed for two reasons. We have the AI rollout around the world, and energy is needed, and Africa has it. Oil and gas and the renewable energy projects that are being distributed around the world. But most importantly, I think this is the greatest opportunity for Africa now. It sits on the strategic minerals that is needed for the development of AI. So number one, the chips that you need, but the power generation that's needed. And if you think about the energy transition, it is the wind turbines, the solar PV panels, battery storage. We're talking about scale of a 30 to 40% increase in energy demand over the next decade. So it's vitally important that the natural resources are packaged correctly for global investors. And that is why I think we've talked about the Africa decade for the last 3 decades, and I think it was all a bit premature. This next decade, I would in fact say all the way up until 2040, is the window that Africa needs to hit, if I can use the American term, term a home run here. It needs to package what they have on a very sophisticated landscape here for global investors. But there's a need for what Africa has, and it's a great growth opportunity if we can get this next 14 to 15 years correct.
What was the most fixable obstacle that has been keeping capital away from the continent?
In 2025, according to UNCTAD, with its preliminary report, these aren't finalized just yet, but we're looking at global FDI of $1.5 trillion last year around the world. That was a recovery off of a downturn in 2024 because of a lot of uncertainty. But Africa only garnered about $60 billion of that. In fact, it was just under that number. That is appalling by every measure. And Africa traditionally kind of averages between 3 to 4% of global FDI. But going back to the points I was raising before, there's a need for what Africa has. Now, what is needed is clearly, in this case, a push for greater reforms in the major economies of Africa.
And then when you look at a country like Nigeria, Ghana, what do you think they should be doing now to decongest some of those clogged areas for especially global investors?
A new era for Africa. We recognize there is global demand for the resources that we have right now. It's our job to show you the transparency that we're capable of. These are the reforms that are already in place. It's not like we're coming from a standstill position, but these are the reforms we can promise over the next 10 to 15 years to give you a great deal of trust in what we have to offer. And I don't think it's a joke right now. I actually think if you look at the combined GDP that I was talking about, that is almost a joke. Africa is capable of a lot more, and with the leadership that I see right now, and I see some of the turbulence that takes place, I see some of the challenges with the currency strains. For example, in Ghana, they had a huge inflation problem. Their currency was under pressure. Very wisely, the government used the gold reserves to guarantee the currency, put that into the central bank to give stability. These are the sort of actions that investors are looking for, and I was pleasantly surprised in front of this audience of global investors, and the UAE is the largest investor in Africa. They were speaking to a group that supports Africa. They said all the right things. This is in our hands to push through the reforms now and have a continuity of those reforms to give you comfort to come into a phenomenal growth opportunity. And as the former head of the African Development Bank, who is chairing the Global Africa Investment Summit, he said, this is our job right now to follow a roadmap of sound economic policies and sound reforms. But very importantly, part of it's marketing. You have sovereign-backed assets in Africa. They're attractive if they're backed by the state, and you have, the regional banks and the local banks there as partners to the global investors. There's no reason it doesn't work. It sounds, almost, I'm like a prophet here saying this should happen, it will happen. But the reality is, if there's a window in time when Africa should be able to have continuous growth looking at the global demand for artificial intelligence and materials needed for the energy transition, it is right.
Thank you so much, John Deftero, Senior Advisor at APCO and former Emerging Markets Editor and Anchor at CNN, talking to us about what Africa should be doing now, especially as an emerging economy, to capture more global capital to the continent. And that's it on Global News for this time. Thank you for watching.
Thank you so much, Annie, for the details there. So right now, we'll give you more updates on what's playing out with the markets that we track on Business Incorporated. But right now, oil is down, gold is up, crypto is down. And for the local bourse, it's down marginally, but see if we'll see a turnaround by intraday later today. Thank you for watching Business Morning. I'm Ladi Williams from here, the team, right here at Channels HQ. Bye for now.